Joby Aviation really remains one of those basically pre-revenue companies that's still very speculative for investors. But I am interested in Joby Aviation because it's really revolutionizing how we may think about air travel. It's kind of a cross between a helicopter and a private jet, and theoretically, it should be much, much lower operating costs because of its electric power and it's just fundamental design to be more efficient. And management said it should be about an order of magnitude cheaper. So that opens up a lot of opportunities. But where's the company going to be a year from now? Well, the simple answer is that Joby Aviation needs to be taking off with their commercial operations. You can see here that they are getting closer to certification with the FAA. That should happen either late this year or early in 2025. They need to complete all this certification process, but they do have 5 aircraft flying right now. And management has said that they're building basically 1 aircraft per month at this point. But beyond that, the company has grand visions to be a disruptive force in aviation, preparing for commercial operation. There's an opportunity to grow in defense. So let's get to everything we need to know about Joby Aviation today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with Joby Aviation's financials. And I really want to start with the balance sheet because right now, this is a company in cash burn mode. So we need to know, how long can they survive? That's really the first question. Can you survive to get to the point where you can actually take off with some sort of commercial operations? Right now, things are looking pretty good. At the end of the fourth quarter of 2024, the company had $933 million worth of total cash and investments. You can also see here, no real debt on the balance sheet. So nothing too big to be concerned about except the statement of cash flows. Cash flow is obviously going to be negative for Joby, $436 million worth of negative cash from operations. They're also spending money on investing activities, purchased a little bit of property, plant, and equipment, but most of their expenses right now are going into actually operating their business, doing the tests that they need to do to get approval from the FAA to actually produce aircraft. I will also note that on top of this cash that there is on the balance sheet, there's a agreement for Toyota to invest another $500 million in the company. That is not finalized, and the company does not have that $500 million yet, but that is something that should be coming. So just given that cash and the cash that's already on the balance sheet, you get to the point where Joby can last for somewhere around 3 years to cover their operating cash flow at the current rate of cash burn. Now, I would expect that cash burn to probably increase as you're building more aircraft, but then you get to the point of, are you actually operating commercial operations? Do you have revenue coming in? Then you can maybe start to finance those aircraft and maybe start to get closer to free cash flow break even. That's a long ways off, but that's sort of the vision there. We have about 3 years of runway before you get to the point where they're really going to need cash. So what's going to happen in the meantime? There's really 3 things that I'm keeping an eye on over the next year. The first is really going to be the commercial operations in Dubai. This is a rendering of their vertiport in Dubai. There's going to be 4 of these where they're going to be able to transport customers from the airport to a couple of well-known locations in Dubai. This is an agreement that they have with the government there, and they should be able to operate this relatively quickly after they get approval for their aircraft. The second thing is going to be defense partnerships. They've actually delivered 2 aircraft to the US government already. So this is something where this isn't a huge focus for them like it is with a competitor like Archer Aviation. I think that's ultimately really good. They're focusing on this ride-sharing platform, but defense is going to be a piece of their business. That could allow them to sell some of their aircraft at a profit rather than having an aircraft that you have to build, finance, and then operate these commercial operations. So those are the 2 things that we know right now. But the interesting announcement recently was this announcement with Virgin Atlantic. They're going to partner to deliver revolutionary emission-free travel in the UK, including connecting Virgin Atlantic customers to and from the airport. It looks like Virgin Galactic is going to basically handle all of the infrastructure that's going to take place there. And Joby's job is to deliver aircraft. So what is this going to look like? Well, this is the London hub, as they're calling it, where you can fly to and from a number of cities around London on a Joby aircraft. So imagine getting off of an aircraft. Maybe you're flying from New York to London, then you're going to Birmingham, just hop on a Joby aircraft instead of taking a drive all the way out to Birmingham. The same thing is contemplated around Manchester. Now, this is similar to what they're building out in Dubai, or what has been contemplated in Dubai, but actually much more potential options of where they're going to fly. So we'll have to see how these things play out. But we're seeing a vision with Joby where there's potentially demand for far more aircraft than they're currently going to be able to make. Like I said, they're making about 1 aircraft per month right now. I believe they can basically double that given the infrastructure that they currently have. So let's say that they can build 24 aircraft over the next 12 months and have that available when they launch their service. You may put 4 or 5 of those in Dubai. Maybe you send another 4 or 5 each, 1 to Manchester, 1 to London. Suddenly, every aircraft that you've been able to build is already ready to be in service and potentially already has that infrastructure there. They also have the partnership with Uber. So there's the possibility that they're going to be able to build out demand on the Uber app in locations where they're able to fly in the US. So they've contemplated places like San Francisco and Los Angeles. Makes sense to be on the East Coast as well. New York, Philadelphia, Washington, D.C. All of these areas are potentially high areas of demand, and partnerships with companies like Virgin Atlantic and Delta and Uber is going to drive that demand. So I think the good thing for Joby is that if they can get their aircraft off the ground, get FAA approval, get flights going on a regular basis, by early 2026, they should be able to start to prove out their economic model. So we want to get to the point where they're proving that their aircraft can fly on a regular basis and they're able to manufacture these aircraft as quickly as they have said they've been able to. 1 or 2 per month would be kind of the near-term goal. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. But the next thing is, what do the ultimate economics of the business look like? And this is the biggest risk that investors are taking with Joby today, is we just simply don't know what the economics are. We don't really know what an aircraft is going to cost to build. Therefore, we don't know what this return is going to be. We don't know what pricing is going to look like. So we can have some ideas based on companies like Blade, what they're charging, what their margins look like. But Joby is likely to be a very different company and a very different business model with a much bigger vision that Blade has as well. But you can see these pieces starting to be put together. And the vision for this Joby network is really starting to be laid out. Dubai, a couple of cities in the US, and now the UK, there's at least this infrastructure on the horizon. So a year from now, I would expect Joby to get their FAA approval to actually have commercial flights starting to commence, probably first in the US, then in Dubai, and then look for the UK to be the next thing from that. A year from now is probably going to be too early for that. But by early 2026, we should have an idea of how many vehicles, how many aircraft are going to be in service in these countries all around the world, and what the economic key performance indicators, KPIs, are going to be for each of those places. Is this a place where you're going to have a half dozen aircraft, 1 or 2? What sort of return are you looking on these? That's when we start to answer those questions. So first things first, get FAA approval, get aircraft built and flying. That's going to be the first thing to watch over the next year. But then the bar starts to move forward. How profitable is this company going to be long term? We simply don't have the answer. That's why this is a speculative stock right now. But I think the opportunity to disrupt air travel is too big to ignore for Joby. So that's why I'm excited about this company. Not one that I own yet, but one that I'm looking at potentially adding in the near future. Let me know what you think of Joby Aviation and the future of the company. What are you looking at a year, 5 years from now? Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.